Ladies and gentlemen, good day and welcome to KNR Constructions Limited Q1 FY23 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. S. Vaikunthanathan, VP Finance, KNR Constructions Limited. Thank you and over to you, sir.
Good evening, everyone. Thank you for joining us today on the call to discuss the financial results for Q1 FY23. Along with me, I have Mr. K. Janardhan Reddy, Executive Director, KNR CL, Mr. K. Venkatramarao, General Manager, Finance and Accounts, and Strategic Growth Advisors, our Investor Relations Advisors. I would like to touch upon some important industry updates, followed by a discussion on the company's financial and operational performance. The pace of highway construction was affected during Q1 FY23 owing to sustained inflationary pressure on the key raw material prices and other input costs. The pace stood at 22 km per day compared to 25 km per day on year-on-year basis. The pace is expected to remain subdued in Q2 FY23 as well as due to the ongoing incessant rains. The input costs have also started to soften, and as a result, we expect the pace of highway construction to bounce back from H2 FY23 onwards. As per the rating agency CRISIL, the national highway construction is expected to be 32 to 34 km per day during the current financial year. As per CRISIL, the Ministry of Road Transportation and Highways is likely to award 12 to 13,000 km of national highway projects, largely under Bharatmala. As per the new reports, the NHAI is planning to reduce the upfront payment made to highway construction companies by 50% by making changes in the existing HAM structure to 20% from 40%. Although this proposal is yet to be passed by the government, this could result in a higher capital outlay by the private players. The NHAI is also focusing on the monetization of the operational highway, which we believe is a positive sign for the whole industry as it will result into deleveraging the balance sheet of the NHAI. Now coming to the update on toll collection, the upward trajectory in the FASTag based on toll collection continued in June 2022 and stood at Rs 2,576 crores, a growth of approximately 21% on a month-on-month basis, which stood at 2,125 crores in May 2020-21. Daily FASTag-based toll collections also reached all-time high to Rs 143 crores per day in June 2022. The growth in toll collection was mainly on account of lower base on year-on-year basis and improvement in commercial and passenger vehicle movement. The central government is intending to change toll using GPS technology, and as per the news reports, a pilot project to test this new method is already underway. As per Honorable Minister Nitin Gadkari, toll plazas would be completely replaced with a GPS-based toll collection system, and tolls would be collected via GPS imaging on moving vehicles. Now coming to the key updates of the company, the percentage of physical progress as of 30th June 2022 for the HAM project is as follows. Chittoor to Mallavaram is at 100% completion. Tansampalli to Mangalore is at 100% completion. Trichy to Kalagam is at 100% completion. Somwarpet is 59.1% completion. Pattanchitram to Madathukulam at 68.3% completion. Ramanattukura to Valancheri bypass at 5.6%. completion, Valanchery bypass to Capricorn at 6.4% completion. During the quarter, the execution has primarily driven by HAM projects. Out of the rupees 1,098.51 crore revised equity requirement for all the HAM projects, the company has already invested rupees 522.04 crores as on June 30th, 2022. The incremental equity requirement of 570.47 crores to be infused rupees 305 crores, rupees 160 crores, and rupees 105 crores for FY23, FY24, and FY2025 respectively. You can refer this to slide number 23 and 24 of the investor presentation for detail on each HAM project. I will now take you through the key highlights of the company. The company has received financial closure for the project as follows. KNR Ramagiri Infra Private Limited HAM received financial closure from NHAI on 30th March 2022. The company has also received letter of acceptance for the construction of 4-lane road from IDA Pasmailaram Industrial Park to ORR worth 34.26 crores. The total collection for the Bihar project, that is Muzaffarpur to Barani, the collection in Q1 FY23 has been 12 crores. Now coming to the order book position, as of June 30th, 2022, the company has an outstanding order book position of rupees 8,585.9 crore. EPC road projects and HAM projects constitute 74% of the total order book, while irrigation projects constitute the remaining 26%. Client-wise, 30% of the order book from third-party clients, and the balance 44% is from captive HAM projects. The third-party order book or non-captive order book, which accounts for 56% of the total order book position, is skewed between state government contracts with 42%, whereas 11% is from central government, and balance 3% order book from other private players. The total order book position is rupees 9,350.9 crore, including one new HAM project. With that, the irrigation constitutes 24%, roads 28%, and HAM 48%. Please refer page number 29 of the investor presentation. The current order book position remains healthy and provides a clear visibility of execution over the period of the next 3 years. A robust project pipeline and already DPR, detailed project report, under the Bharatmala project should accelerate the project awarding activity going forward. The company is targeting a further order inflow of 4,000 to 5,000 crores for the year FY 2023. I will now request Mr. K. Venkatram Rao, our GM, to present the results for the quarter ended 30th June 2022. Over to Mr. Venkatram.
Thank you, sir. Let me take Q1 FY23 standalone financial performance. The revenue for the quarter grew by 20% year-on-year to rupees 890 crores as compared to 740 crores in Q1 FY22. EBITDA for Q1 FY23 witnesses a growth of 15% to rupees 165 crores as compared to 143 crores in Q1 FY22. EBITDA margin in Q1 FY23 stood at 18.5%. Net profit for the quarter was 100.9 crores as compared to 73 crores in Q1 FY22, a growth of 38%. Now coming to the consolidated financial performance, the company recorded a 21% year-on-year growth in the total revenue from rupees 807 crores in Q1 FY22, rupees 980 crores in Q1 FY23. EBITDA came in at 211 crores in Q1 FY23 as compared to 202 crores in the same period last year. EBITDA margin in the current quarter stood at 21.5%. Profit after tax stood at 90.5 crores in Q1 FY23. Now moving on the standalone balance sheet, the company continues to maintain a strong balance sheet, and standalone debt as of June 22 is rupees 124.75 crores, that is towards working capital. The working capital days stood came down to 60 days compared to 63 days in March 22. The consolidated debt as of June 30, 2020 is rupees 1,592 crores as compared to rupees 1,410 crores as of March 31, 2022. The net debt to equity on the consolidated basis as of June 30, 2022 stands at 0.66 times as compared to 0.49 times as of March 31, 2022. With this, we can open the floor for question and answer.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Participants who wish to ask a question may kindly press star 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shravan Shah from Daulat Capital. Kindly proceed.
Thank you. First of all, congratulations on decent performance in this quarter. Sir, as I can see in terms of the irrigation order book versus March, it remains the same. So just wanted to understand how do we see the full year execution from irrigation projects, particularly if I name the projects, 2 JV projects, NCC1 and HES1, how do we see that execution for this year? And the old one, the Palamuru lift irrigation and Kaleswaram. So how do we see? Can we see these 2 projects to be completed in FY23? And how much execution we expect from both the JV irrigation projects?
Right now, the situation is that outstandings are quite a lot. As you can understand, I think.
Excuse me, sir. This is the operator. I'm sorry, you seem distant from the phone.
Okay. Actually, as you know that we are now suffering for the payment in this irrigation project. As of now, the outstanding is, I think, during the last month end of July ended, 850 crore is outstanding as of now. So now that outstandings are piling up and the payments are not realizing, we are little bit slowing down on this. However, if we get the payments in a month's time, definitely we will gear up and as per schedule, it will go on. And I think in coming 1.5 years, we will be completing entire job if the payments are intact.
Okay. So, sir, do you see, as you mentioned, 850 odd crore is exposure outstanding. So, out of that, anything have you got an indication that in this month's August or in September, how much are we expecting to receive?
Actually, that department side, they say that you may have to wait for some more time. As they are saying, coming 1-2 months, partial payments will be released. I think even state government is struggling to get out of that loan situation. So it is quite unrealistic thing now to say anything. If I say anything, I think it may go wrong also sometimes. But these are the predictions. What that 2 months before 2 months, they are not saying anything that will happen.
Okay. Now coming to the HAM projects particularly. So the KSIP HAM project, how do we see the execution for this year, and 2 Kerala HAM projects? So how much we see the execution, because currently we have close to 3,100 crore order book from these 2 HAM projects in Kerala. So can we see kind of a 40-50%, so 1,200-1,300 crore kind of revenue from these two projects for this full year?
Yes, sir. 40% we can expect to complete. That's what the plan is. Generally, we have targeted for 45, but we have lost this season complete rains, and there have been a lot of problems. So May completely we lost. In April also 10 days we suffered for the early, some cyclone has come up, because of that 10 days to 11 days we suffered for that in April. And May full was in monsoon. So the expected, some preparatory works to do the rainy season work could not be done because of the early monsoons that have happened. Generally, in Kerala, they hit around June first week or second week. Most probably it is in the second week. Sometimes it is in the first week also. But this time, first May it was announced as monsoon. It was the major flaw which has happened. So 47% was the internal target for us to complete, but I think now we are revising it to 40%.
Okay. And regarding...
Sorry to interrupt, sir. I request you to kindly get back in the question queue for further questions.
Okay, thank you.
Thank you. Participants are requested to kindly restrict your questions to 2 per participant. The next question is from the line of Mohit Kumar from DAM Capital. Kindly proceed.
Yeah, good evening, sir, and congratulations on another good quarter. So my first question is on can you just give us the breakup of revenue in roads and irrigation? And the related question is there any change in scope in the order book which you have booked in this quarter?
Actually, the breakup is like that. In irrigation, actually, we did around 35%. In road, HAM, we did 40%. And our EPC road project, we did 20% and 5% on back-to-back basis.
So you're saying 35 HAM, right? 40 EPC?
Yeah, 35 is irrigation, 40 is HAM, 20% is our regular EPC road project, and 5% is back-to-back.
But the irrigation order book is flat. Does it mean that you have booked extra order in irrigation? Is the understanding right?
It is because whatever, as per our accounting policy, actually we book expenditure, we book revenue based on our percentage of completion. So whatever expenditure booked plus margin, we will consider as a revenue. But in our order book, actually we will go as per the certification. So that's why if you see here, you have gone through it, there is no movement in the order book, but the revenue of around 300 crores has been booked in the irrigation. That is based on expenditure accounting.
Understood. And secondly, also the outlook in terms of order inflow. Are we seeing, the NHAI floating orders or bids for the area where we are comfortable, and what kind of pipeline you are seeing at this point of time?
NHAI order book, I think quite good, sir. I think we were expecting new set of bidding norms to come into force from next month onwards. I think partially they haven't come up with the 70/25 method. I think next month it is expected to have its rally, sir. So definitely we are getting up kind of, as you know, we are uploading certain projects with us which are completed, and getting up for the equity, additional equity because 75/25 would attract more equity and also. So for which also we are getting up. So I think some better prospects could be there in upcoming months.
Any the numbers, sir? Any number of bids you are participating, which you are seeing on the ground?
In Kerala we are participating almost at 2,000 crore. There's some work has come up. We are participating, and Tamil Nadu there have been 3 set of projects like in Chennai, flyover areas, there have been few flyovers from Chennai also. And few projects in Uttar Pradesh, few projects in Bihar we are focusing. As well, I think some projects are there in Telangana also this time. We are even focusing. Yesterday we placed a bid on Telangana region also, EPC model. I think there have been good prospects, sir.
Understood, sir. Thank you and all the best, sir. Thank you.
Only one sort of uncertainty is that unless that bid capabilities and all in place, I think definitely the healthy bidding may not happen. That's what our estimate is. So hope for the best on this.
Thank you and all the best, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Nitin S. Dharamwat from Aurum Capital. Kindly proceed.
Yeah, thank you for the opportunity. Couple of questions. You mentioned in the notes about some IT search operations that were conducted in our offices. You mentioned that there was nothing found so far and which calls for provisioning. I wanted to understand, was there any IT search happened earlier in the past in offices, in company offices, and was there any adverse finding that time?
Actually, in 2011 we got a search done. That time there's no big outstanding bill they got in, but they tried to impose certain taxes which were challenged later days. Initially we paid and later we challenged all these and we got back also. And now again some sort of thing is going on, but as of now due to new such proceedings we haven't received any sort of proceeding order from that. I think the search parties, what I heard from the department is that search parties are now preparing the statement, I mean appraisal report they call it. They would prepare that and send it to the central circle. Central circle, they will investigate entire accounts. I think they will open all 5 years accounts and then they do the real assessment and then come back with their findings. And then I think they open up the floor for us to say some demand. They may demand some taxes. Subsequently, later we may challenge depending on the situations that time.
Got it. So in 2011, there was no adverse penalty that has come to us even that time. That is what we are concluding.
Yeah, actually they levied certain penalties and all, but later we got back on that.
Yeah, got it. My second question.
They search. They want to. They've been given targets like the government says. We need so many targets from you. So they try to impose by some interpretation, some sort of drama they do and all. But later they get dissolved because after we submit everything, definitely there's an officer who's again making an allegation. He may not agree. But if you go to the appealing forums, definitely your arguments will be listened to and then you get relief over there.
Got it. My second question is, are we planning to get more orders and how is the competition now in the bidding process? Last time you mentioned the competition was intense. So has this reduced now a little bit? And what is the order book position that want to build?
So actually, this year we are targeting about 3,000 crore minimum order. Minimum, I mean to say. With this actually, people are uptake for upcoming because any order if I take, it is taking almost a year to take commencement. So because of this, definitely we are now focusing on these bids in a bit early stage, as we have a clear earning visibility for 2 years at least, if you can consider. So that, but still we are now picking up the order because we don't want at one point of time if I come into pressure, my order quality may reduce.
Yeah.
Because demand versus supply always make you somewhere it will give you some sort of negative impact, which we don't want on our books. So definitely, sir, whenever there is an opportunity, we are thinking in ourselves and picking up the orders and mobilizing it in a right way also. But here, now the situation, sir, as I earlier said, that, we are definitely waiting for the new bid norms to come into place. As you know that it's out in the market also, everybody knows it. So, if they impose the bid capacity issues and equity requirements, and then if we go for 75-25, it may be bit lucrative bidding. I mean to say, if there is some sensible bidding that could happen, then it may improve our order book, which we are hoping down. I think coming 1 month's time, all these should be in place, sir.
Oh, got it. So will this change our revenue guidance, and what is the revenue guidance and operating margin for 2023?
Sir, actually, 2023, we may not see a big jump this side, but of course, if I receive some orders in this year, definitely the launching of these orders will take at least 7-8 months. Normal course is only 7-8 months. Again, we are cropping up with new. Most of the projects are now coming on the basis of the greenfield highways and all. They are coming in entire bypasses. So the land acquisition is not that speedy. So definitely, it is taking almost 10 months to 12 months for commencing all these projects. So definitely next year, I mean FY24, we may be a bit of improvement that will be there. However, we have clear visibility now, sir, for 2 years at least. I think 9,300 is the order outstanding as of now. So which will cater our 2-year requirement. Then again, as we are focusing on new orders, which may also improve our situations.
Got it, sir. Thank you so much. And if I have any additional question, I'll come back in the queue.
Thank you, sir.
Thank you. The next question is from the line of Jiten Rushi from Axis Capital. Kindly proceed.
Good evening, sir, and thanks for
Good evening.
Sir, my question was on the bid pipeline. So you said you are targeting to bid in different geographies, BP and Bihar. Sir, as you said last time also...
Mr. Rishi, sorry to interrupt, sir. Could you be a bit
loud? Yeah, can you hear me now?
Yeah, this is better.
Yeah. Okay, sir. I'll just repeat my question again. So on the bid, your targeted bid pipeline, you said you are targeting to bid in different geography of North, UP and Bihar. So do we see, because so far we are comfortable in South, and as you said last time also, South India can see more bids coming in. So any reason for going in that geography? This can dilute our margin also going forward. So any thought on that?
Actually, yes, really, there's a situation now in southern India, the projects are also reducing. Unless the new highway, the expressways which they are planning around 22 members, which they come down, until such time we may have to focus on a few other areas also. So we are definitely thinking to go around. Okay, once it comes to the question of diluting the thing, it can only be known after we succeed on the bids, sir. Because, right now, sir, I have the visibility for 2 years. Mm-hmm. So I don't have to rush and hurry for picking up an order. In a very uncertain time like now, there is war between Russia and this one is going on. There is certain expectations on Taiwan and versus China. So all these uncertainty it is, one should always think and do his own operations, sir. So definitely we are in keeping everything in mind and moving forward, sir. So even the success ratio also could be reduced in this pattern in which we are thinking, but we are fine because we have comfort for 2 years. So definitely, at least 1.5 years we have comfort, we can say. But as of now, we are targeting a very lesser target like 3,000 crore only we put for ourselves, because to make for our 1.5 year, 1 year upcoming requirement, we would need.
But sir, is it fair to assume that we can expect a revenue growth of around 15% this year with a margin of 18 to 19% under it, as of what we have received now, and an order inflow which we were targeting 4 to 5,000 crores at the start of the year. Is it fair to assume the same run rate for FY23?
Pardon, sir?
My question was, is it fair to assume a 15% revenue growth for FY23 with a quarterly margin, with a margin run rate of 18 to 19%, what we could do on the commodity price, and an inflow of over 4 to 5,000 crores? Because at the start of the year you were saying a higher inflow, but now with 3,000 crores, it seems to be on the lower side of the guidance. So my question was, any bids you are targeting from the state, any state projects also, which can get you that inflow of 4 to 5,000 crores, and on the revenue and margin?
5,000 crore is required after 1.5 year, Karan. So now we are talking about 1 year, I think upcoming year only. That means FY23 only we are talking about. For which it's a lower side target which I said. And there is no this thing that upper cap we haven't spelled out also. We have requirement about minimum requirement. That means minimum I need is on 3,000. But it is not that we are restricting ourselves to be at 3,000 only and then set down the bidding. No, we are going forward also.
What the Econometric said, sir, in the opening, and 4,000 crores plus can be achievable.
The market and all, everything is good, kind of that. I think in coming, sir, what have been said by the NHAI officials that they start the bidding on these expressways and greenfield highways. They will start from coming 2 months.
On the Cube bill, any thought? When can we expect the final closure and the balance payment? What is the remaining payment?
Pardon, sir?
Little loud.
Could you be a bit loud?
Cube Highway D. When can we expect the final closure and the balance proceed?
I think another 2 months we are trying to finish this. By the end of everything goes well, definitely we should be closing by this quarter end.
So what is the balance?
Mr. Rishi, sorry.
What is the balance payment pending? And this is the continuation, please. What is the balance outstanding we will receive now, sir?
Balance outstanding from Cube.
It will be, we are working out that to final around 200 to 220 crores we will receive actually for transfer of 100% shares in KNR Srirangam and 51% each in Sankrampet Tirumala. So quantum will be between 200 to 220 crores.
Okay, so I have further questions. I will come back in the queue. Thank you and all the best.
Yeah, thank you.
Thank you. The next question is from the line of Neenit Prasad from Investec. Kindly proceed.
Hi, sir. Thanks for the opportunity. So just wanted to first ask on gross margins. If you look at first 9 months of the last year, we were hovering around 34-33%, and which is gone down over the last few quarters to 28% now. What is this on account of? It's only whether is it purely RM inflation, or is there anything more to it?
Yeah, so you're right. The inflation, input material prices have gone up like anything, and there is big uncertainty. Every now and then things are changing. I think because of this rainy season, things are under bit under control. Otherwise, they would run further forward. Even GST has gone up now. If you consider all that, I think things are not in a right shape. So the major reason is cement, steel, and fuel. I mean the diesel, bitumen prices. All that. They are ruling on the thing.
Sir, so with these moderation in commodity prices of late, where do you see this number settling in the next 2 quarters?
Sir, that is quite difficult to say. But however, we are sticking on to that at least earlier guidelines like 16, 17 levels are quite possible. But we'll have to see, sir. Even if things go beyond our control, definitely things are not up to the mark. But we try our best in this.
But would it be safe to assume that gross margins now would have bottomed out to a certain extent, or and it should only move northwards or remain as they are currently? Would that be a decent assumption?
Actually, sir, if you straightforward ask this question, definitely there are uncertainties. So scaling down is always a better option to consider and go forward. If things are better, definitely things will come up in a better shape.
Understood. Okay. So just the second question is on depreciation. We generally see a fair bit of volatility in our depreciation, and that's been the case over the last, let's say, few years as well. Even in this quarter, if you look at it, depreciation was down 18-20% on a sequential basis. So one, what led to such a decline in depreciation? And number two, why is such volatility in the depreciation number which you have?
Because the depreciation number is based on what are the assets acquired for the road project and irrigation project. So as you know, our irrigation, we depreciate in the 3 years life cycle. In case of road project, we depreciate in the 7 years life cycle. So clearly you are seeing in this quarter, actually there are not much addition in the irrigation assets, because irrigation assets, what are the project is going on, almost what are the machinery is required, we already deployed. So there is no addition in, that's why this quarter depreciation was less. And we hope that actually further irrigation projects are not coming, and that definitely what are the existing irrigation, all machinery we have acquired. So now we hope so depreciation should be at this level only.
Understood. Okay. Thank you so much, sir. Thank you.
Yeah. Thank you.
Thank you. The next question is from the line of Vibhor Singhal from Phillip Capital. Kindly proceed. Hello, Mr. Vibhor Singhal.
Yeah.
Mr. Singhal, you are unmuted. Kindly proceed.
Which one?
As there is no response, we'll be moving on to the next questioner. The next question is from the line of Parikshit Kanpal from HDFC Securities. Kindly proceed.
Hi, sir. Congratulations on a good quarter. So my first question is on irrigation. So this quarter we had about 300 crores of revenues from irrigation. So in the second quarter, how do you see this execution moving, given that we have 800 crores to be received from the outstanding irrigation outstanding?
So concerned the rainy season, considering the rainy season, and most of the order is in the high rainfall zone. As you know that Mangalore, the Dariya Shanti to Bantwal project is in the area of Mangalore, which is in a hill station and has got high rainfall problems. And the rains have, early monsoon has started for us, and we are really suffering on that account. So there had been certain scale down in this, and again Kerala projects also, they have been under rain zone, and the rains are also happening to the extent possible. So definitely, sir, this time we are only guiding about the second quarter. We are a little bit light, and trying our best to push out. We'll see if upcoming this 1.5 month time still is there. If the rains are coming down, definitely we'll make and come up to the expectation as we have expected. Otherwise, a little bit scale down, 100 to 150 crores will be down with that, sir. And having the phase of irrigation, it is not wise that I can raise the certain execution pattern there, because that may not help me in financial thing, because outstandings are heavy, and again, if I invest more, getting back may be difficult.
No, so I was talking about irrigation only, that irrigation, are we going to significantly step down the execution given we are not getting payment? So because earlier calls you have said...
Sorry, yes, sir, please go on, sir.
Because earlier you've been saying that you will have to maintain some level of execution because you have payments outstanding, so you have to keep executing the project at some reasonable level. So now this quarter, first quarter, we have recorded about 300 crores of revenues from irrigation, and 800 crores is the total dues which we have to collect from the government. So do you think 300 will get scaled down significantly in second quarter to like 100 crores or near less than 100 crores? So how do you see the execution in irrigation? And already like 1.5 months has gone by. So have you already scaled down the execution in this segment?
Yeah, there's little bit scale down is there in this. Except on that earthworks and all that, we are not working on major concrete works and all. Because concrete works are involving a lot of investment also, as you know, the cement, steel and all to be put in. So those areas, little bit slowdown is there.
In this quarter, have you received?
We'll have to speak to we have already spoken with them. They are assuring another 2 months we'll pay you. You continue to do the work, which we wanted. Please do confirm on in writing so that we can take it granted and go ahead.
So in first quarter, have we?
They are able to pay us in 2 months. Definitely, we'll get up the thing.
But in first quarter, have we received any money from the government on the irrigation?
No, sir.
Actually, after March, actually, we received that already we consider because we have Concall on 31st May. At that time, it was 650 outstanding. That is after considering around 130 crores that we received after March, actually. But from May onwards, we have not received anything.
Yes.
So Venkat, what was the total?
That is May, as on date, it become 850.
Sorry, can you repeat that, Venkat?
This after March actually, because what 650 figure we told as of 31st May. So after March actually we received around 130 crores in the irrigation, but after May we have not received anything.
So the May it was outstanding was 650, which has now become 800 crores. So
850, yeah, 850.
850. So 200 crores we have filed up on the debtors.
Yeah, filed from May to July. Yeah.
And beyond that, any unbilled or any, this is just pure debtors or it includes everything, work in progress, unbilled and everything?
This includes debtors as well as unbilled also.
Okay. And my second question is on this debt. I just missed that debt number. Can you just tell us what is total standalone debt and cash net debt?
Yeah, standalone debt is 125 crores as of 30th June, and cash is around 45 crores.
45?
Yeah, 45.
Okay, Venkat, thank you. Those were my questions.
Okay.
Thank you. The next question is from the line of Nikhil Abhyankar from DAM Capital. Kindly proceed.
Yes, sir. Thanks for the opportunity and congrats on a good set of numbers. So I just wanted to know why is the other expenses down YOY and the other income has risen? Any specific reason for it?
Pardon, sir? Why, sir? Yeah. So can you repeat, sir?
Why is the other expense down? It was 62 crores earlier, and now it is around 48 crores. And why is the other income risen from around 5 to 9? Okay, that is not that big a jump. But why is the other expense down?
Because basically, because what has happened in the major is due to because this quarter actually whatever our projects are now in execution stage. So in last quarter there was some design expenses was there actually. Now design everything is approved. So due to that reason this quarter was not there. But specific detail actually we will provide you.
Okay. And sir, any update on the sale of TOT project?
Sale of BOT project?
Muzaffar Baroni.
Actually, we are
No, in Muzaffarpur sale will take time. Yeah. Because now the NHI is planning for the four lining and all. At that time, yes, there is an option for right of refusal. By that time, we can get back our equity and through the loan. So since that four lining is being planned, they have yet to decide whether it is from by HAM or by BOT. They have to decide. Most likely, they may decide as HAM. So in that case, there may be a right of refusal also. So we are waiting for that. Till such time, no, the project is being serviced by us.
Okay. And so earlier you had mentioned that we were also looking at railway orders. So do you see any opportunities in this year?
Railway orders, as of now, we are stopped focusing on that right now because there was huge tendering that was done in highways and urban infrastructure like flyovers and all other. And there have been a lot of bids in pipeline for coming also. So a bit of occupancy is there, and hopeful that we will be getting that 3,000 to 4,000 crore order which we are targeting. If it is easily achievable, why enter into a new zone? Or otherwise, if the ordering intake is becoming a little bit difficult here, definitely we'll focus on that.
Understood, sir. And just one last question, sir. You also mentioned that NHAI contribution might come down to 20%. So how do you see the competition being affected by it? Do you see any increased margins because of it?
Yeah, actually, sir, what is happening right now, you might have seen the bidding pattern. I think very, very unhealthy bidding that is happening in the HAM as well in the EPC front also, both the places. Because, earlier there was no bank guarantee only. I think past 3 months they put on the bank guarantee issue. With that, I think there is certain scale down in bidding numbers. I think bidding number of bidders participation has reduced, but still the aggression is not. And now they are now capping with the bid capacity. And equity also they are putting the clause for scaling down the bidders and preventing the non-serious bidders also. So with this, I think there should be a number of players also will reduce, and I think only serious players who are likely to participate or who can invest into the equities, they only will participate into the bidding. I think this process would start in another couple of months. Maybe for the next month, which I have been told, but okay, couple of months is the right choice to take it because we always if it is done in that way, definitely we are happy and healthy bidding may happen.
Yes. So just one last question, if I may. The margins on irrigation projects are somewhere around 24%. So is it, and given you have just mentioned that maybe you won't be executing any irrigation orders, and so revenues won't also accrue to it. So is it fair to assume that the margins will be hit at least in the next quarter because of it? Because it is almost contributing 30% of our quarterly revenue.
Actually, sir, non-execution completely we cannot stop the project, because if you log on to the project only, you may hope to get payments. If you completely quit out of the project, definitely the Telangana government they may not pay us also. And we have quite good piled up outstanding, so which definitely will be there in that. And again, considering this much delays that are happening, so however the irrigation is not that better this time, because if you see that working capital interest and everything is charged to that, definitely whose EBITDA has already come down to 17 and 18% only.
Okay.
So, and sir, and the same, one better thing in this is that we have an escalation clause in a better way in this Telangana region, so that for this irrigation project. because they directly there is a chief engineers committee who will decide the ruling price on the bitumen, steel, cement, and all that. So definitely it's going to be bit of good prospects, but because of non-payments again things are under doldrums.
Understood.
I think yeah, they've also come down, sir. Even now, earlier it was having a good margins, but now because of the delays that they are doing on the payments and all, it is coming down to the same levels.
Okay. Understood, sir, and that's all from my side. All the best.
And moreover, sir, we were guiding only 15, 16 levels and all. But every time it is happening in a big way, so everybody is fixing us to be at 18, 19 levels. But really, it is not possible that every time we can deliver that. We are overachieving. No, see, any unrealistic thing like some claims, something which is coming up, then it will keep us in a very good shape. But otherwise, normal operating margins are likely 14, 15, 16 levels only.
Okay, sir. Thanks a lot.
Yeah.
Thank you. The next question is from the line of Parvez Qazi from Edelweiss. Kindly proceed.
Hi. Good afternoon, sir. Sir, I'm sorry if this question has been answered earlier, but when do we expect the appointed date for the Chittoor-Thatchur project?
Actually, there is around 50% land acquisition which is done. Now, I think my site staff and even the project director of NHAI, he is also saying another 30 to 40 days he will take to complete that 80% proportion. Because now the disbursement has started, so things are in little bit in speedy way. We can hope for this to happen in coming 40 days, 30 days.
So we can expect an appointed date probably towards the end of this year?
Yes, sir.
Sure. And a couple of questions for Venkat. What was the capex that we did this quarter?
This quarter we did around 60 crores of capex.
60. And what was the contribution from irrigation projects to revenues this quarter?
Irrigation is 35%, actually, around 300 crores.
Sure. Thanks. That's it from my side and all the best.
Yeah, thank you for this. Yeah.
Thank you. The next question is from the line of Alok Devra from Motilal Oswal. Kindly proceed.
Good evening, sir, and congratulations on decent numbers. Sir, just wanted to get a sense on the execution side because you're mentioning that this quarter we did around 300 crores or so from irrigation, and in second quarter we'll be, because of the monsoon, it will be coming down to nearly 150 crores. And so just wanted to get a sense what kind of growth we are looking at realistically for this year, sir, because irrigation might not be at 300 crore run rate for almost the next 3 quarters. And even second, third quarter for the road sector also would be kind of, muted. So just any indication on the growth we are targeting for this year?
Yeah, actually, sir, that concerned definitely irrigation maybe per quarter it could be reduced by 50% also. So 150 crore we will be getting, but I think 40% of execution which we are expecting on 3 new projects. And Chittoor-Thatchur also we are expecting about 20 to 25% this year only. So with all that and balance in the projects which are now ongoing, with all that I think we'll be achieving around 3,500 plus, which we are estimating, sir. Maybe second quarter we are a little bit down, but third, fourth quarters we can do a better job. There's no doubt.
Sure. And sir, you mentioned that while the revenue in irrigation you have around 300 crores, but order book has not reduced. So that's because it's not authenticated, and so just wanted to understand what's the realistic. I mean, what's the order book now if we adjust for all these numbers which you have not reduced from the order book?
So in that case, you can reduce around 400 crores, you can reduce from order book, actually.
Okay. So rest all the projects are where we have not started the execution. So 8,600 crores is the order book excluding the Chittoor project, and then this 400 crore we need to further reduce from this.
Yeah, correct.
Sure. And just last question, this depreciation you mentioned it reduced because of this, the segmental mix change. So what's this depreciation run rate will continue ahead, or how are we looking at depreciation expense going forward?
It will be the same because now we are not adding any machine in the irrigation sector. So we expect that depreciation should be on this level only.
Okay, the current, the first quarter.
32, 33 level.
Sure. That's okay. Okay, I think that's all from my side. Thank you and all the best, sir.
Yeah, thank you, sir.
Thank you. The next question is from the line of Shavik Chakraborty from Dolat Capital. Can you proceed?
Yeah, thank you for the opportunity. Hello, sir. Sir, like you said, for the revenue guidance, like for FY23, around 3,500 crore plus. So can you also guide for FY24? That will be my first question.
That is too far.
Yeah, see, the targets for 24 are about, say, 10 to 15% growth we can expect, sir. It is between 10 to 15%. But, because of lots of uncertainties that are happening, margin line, it is quite difficult to, but turnovers will be, we have to complete entire order book in coming 2 years. So definitely we have to cross.
Sir, and for the EBITDA margin for FY23, can we expect a margin of 15 to 17%?
Sir, actually, right now you can take it like that, but because after that season starts, then only we will know how these steel cements will behave, and most of the projects are carrying structural work only. That is a major flaw in this.
Okay, sir, and one bookkeeping question. Can you give us the number for the consolidated cash?
Yeah, take a quick chance. It will be around 200 crores actually, console cash.
200 crores, right, sir?
Yeah. Including of these margin money all put together.
Okay. Sir, and just one last thing. So by the end of this year, can we expect like a zero debt?
Actually, March 21 and March 22, we have zero debt only. But definitely these receivables are piling up. That's why we have taken debt into this quarter. But definitely we expect that this receivable will come down. We will receive all the receivables. Then definitely we will be again zero debt company.
Okay. Thank you, sir. That's all from my side. All the best.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
Yeah. Thank you all for joining us on this call. Please reach out to our IR consultant, strategic growth advisor, or us directly should you have any further queries. Thank you. Now we close the call.
Thank you. On behalf of KNR Constructions Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you.